Well, I want to thank everyone for joining me today. I'm John Logan, and we're going to talk about two different things today. We're going to talk about market profile in general, and we're going to talk about my derivatives of that general market profile concept. We're going to go pretty quick, and it's very difficult to give a dissertation on market profile in a 45-minute webinar. So hang on. We're going to be able to, when you actually are purchasing the product, if you want to go that far after today's webinar, you'll be given quite a few tutorials that I've developed, manuals, courses, things of that nature. So again, we're just going to touch on what I think is very, very important for you to be able to make a decision to move on the markets in this day and time. So I'd like to show you a product that I've developed that I believe takes all the guesswork out of timing the market. I'm also going to show you the methodology behind the scenes that makes it all work. But I'd first like to share with you a story about how this all came to be and what was my light bulb moment looking back on things. So we're going to, first of all, let's do a little housekeeping and take a look at this risk disclaimer. And by the way, Steve Dahl, my partner up in Chicago, is going to be answering questions real time. And he's, on the platform here with us on GoToMeeting. So feel free to ask questions while we're talking, and then at the end we're going to do a little bit of a Q&A session, and I'll be doing that. So again, I know you guys have read this word for word, so that's just a joke. A little about me, but the story I want to tell you of how I really deep dived into this market profile concept, it was really that light bulb moment that hit me in the face. And I'd gotten beaten up really, really bad in the Chicago Board of Trade that month. And I was kind of feeling sorry for myself, huffing and puffing, standing there thinking, maybe I'm out of my league. What am I doing? I can't do this. Maybe this isn't for me. Maybe some of you have been through that. It's tough when you get banged up trading. And if you guys have been trading for a while, you know what I'm talking about. You start questioning yourself. But at that exact moment, I feel this hand on my shoulder. I turn around, it's my mother. I said, Mom, what are you doing here? She had come up from Chicago to North Carolina just to say hello. She'd been in the office for a while, observing what was going on and all the wonderful comments I was making about myself. So noticing what state I was in, she decided to say something, and this one kind of beating a dead horse here. First of all, you're never going to make money trading if you keep losing money trading. I said, thanks, Ma. I already figured that part out, but thanks. Now, this is arguably a woman with the least knowledge about trading that's ever lived. But then she said something else. She said, it's not your job. She grabbed me by the arm, told me that it's your job to use the math degree that I paid for, develop a system, and allow that system to do the work. Then it's your job to walk to the bank and collect the money. I said, I like this part. I was a little younger and at Chicago and was freewheeling a little bit up there and really hadn't developed a very pinpointed system yet. She also said I wasn't going to trade again until I had a plan to use something that I already knew worked. I said to myself, what a novel idea. She said, isn't this all about numbers? And she also said, this is what you need to concentrate on. This is what you need to focus on. When she shared this with me, everything changed. She enlightened me to what my job was, and doing what I could do would be the best situation for me and possibly others in the office. At that moment, I knew what I needed to focus on, and I knew what I needed to let go of. I wasn't God's gift to the trading world at that time by any means, but I did have a talent for making sense of things mathematically, and it took a complete novice to see that. I stopped running around trying to explore everything and instead focused on the one thing that made sense to me, market profile. This one thing has been heralded as one of the most logically accepted ways to look at the markets out there. 2 years later from that moment, and that one 5-minute conversation took me to having a reliable way to analyze financial instruments for my life, make money, and speak about it globally to the largest fund managers in the world on behalf of Bloomberg. The logic that I use, and I'll talk to you about today, is embedded in this product called the Edge that I've developed. So believe it or not, that's how this endeavor in the market profile started. It's a true story. And what we're going to look at today are my derivatives of that concept in the way of an easy-to-use tool set that will allow you to make money on the markets on a day-to-day basis. So what we're going to talk about today, and thanks for listening to that, it's a true story and it changed my life actually. Where and when to take positions, volume and price analysis redefined, and 5 simple trade setups using the edge. And then we're going to go into Q&A. And Steve, again, is here with us, and he can answer questions along the way that you may have, but we'll try to get pretty deep into the questions later. So the big question is, how can we know where the direction of the market is headed? And how do we know when a shift in control is occurring between market participants? This is a very, very important question here. How do we know where these transitions are occurring, and when are the best trading opportunities happening? And where are the areas to be aware of to enter and exit these trades? So to answer all 3 of these important questions, I thought it would be great to create a standalone piece of software that boils everything down to a very simple set of descriptors that will allow you to know when the tide of the marketplace is shifting, and therefore what side of the market to ultimately be on. Now, if you can and this is just a picture up top of the product called the Edge, which is a piece of software that I created standalone. You don't need any data feed or charting package to use it. And I've got a charting package down below with a picture of the S&P 500 and what we're going to focus on today, which drives this product up top. We call these our TAS profiles. These are derivatives of the original market profile that, again, take a very subjective viewpoint, in my opinion, that market profile uses and turns it into a very objective rules-based environment that, again, this particular piece of software completely relies on. Now, if you know which way the tide of the marketplace could head, think about all the different things that you could take advantage of. Most of the stocks in today's world, 90% of them, last calculation that I've seen, trade with the market in general. The market today is super high correlated with all the ETF trading and things of that nature and basket trading. A lot of stocks just trade with the market. So if you can understand which way the market tide is shifting, you can trade obviously the S&P, but you can, which is what this product focuses on, but you can also trade high beta stocks. You can also put on option strategies on different instruments that are underlying within the S&P 500 or big S&P spreads. So there's a lot of different things that you can do. It's really countless opportunities if you can just know which way the market is headed. So what if we could use a concept called market profile to find out where the institutions are trading and trade with them instead of against them? And what if we could take this concept and put it into a very rules-based environment to always trade successfully? That's kind of the holy grail there. Market profile made simple using TAS profiles. And this is what we're going to focus on for a little bit, and then we're going to come back to the edge because we're going to lay a little bit of a foundation with the profiles themselves and why they are so important. Remember, we're not really inventing anything here. We are finding patterns and understanding in a rules-based environment the best case scenario to get into. Remember, Einstein never invented anything, he said. Can you believe it? He said that. He just noticed patterns. And that was a statement that really rang a bell with me. So the first thing I want to say is you're used to looking at a bar chart. This is a chart of IBM. I just picked it out of the blue, and there's a volume relative to time on the bottom here. Now you're usually used to seeing volume, like a volume bar there, relative to a bar up here. So that amount of volume spike happened to that bar. But what we're going to talk about today completely throws this out the window. We're not going to look at volume relative to time. We're going to look at volume relative to price. And we're going to start out with probably the shortest dissertation on market profile that you will ever get. And one of the things that I want to talk about first is when Pete Stottlemyre, who I spent about 2 years with in the Board of Trade, started this concept, the market he divided into 30-minute sections, and this is obviously an old chart because the S&Ps hadn't been around 1,000 in a long time, but wanted to look at time at price, right? So in that 30-minute span, that price went from 1063 to 1070. The second 30-minute span went from 1072 down to 1065, and so on and so on throughout the day. So there's, whatever, 6.5 hours divided by 30 minutes. There's a couple of bars in the middle of the day on 30-minute time frames. But what he did is he labeled each time frame with a letter and that price span, as you can see. So that's the range for that 30 minutes and so on, and this is the letters corresponding completely with those bars there. At the end of the day, and these are time price opportunities, he called them. At the end of the day, you collapse all that data from the whole day to the left, and you develop what's called a completed profile for that day. Now, this is not volume at price, it's time at price, right? Now, what I've done, because I'm a huge believer in volume, is I've developed a derivative based on volume relative to price. And here's volume relative to price. But you're used to seeing price in a familiar metaphor on the vertical axis. So price, again, on any bar chart is usually 0, 100, whatever. And you're used to seeing a chart with price on its vertical axis. What we've done is taken volume and turn it on its axis to the right. So that bar chart from before, where you saw volume relative to time, now we're going to look at the volume relative to how much volume happened at a certain price. Okay? Now, if you kind of step back for a second, and if you've even brushed on any type of statistics 101 concept, and you understand what a bell curve is, a bell curve is usually how to look at a normal distribution in statistics. And in a normal distribution, you've usually got about 70% of all the data points lying within that meaty part of the bell curve, a standard deviation away from the mean. All right. Now, what we're going to focus on is this meaty part of the bell curve, because this is what we will call the fair auction or the balanced area in our analysis. And I've turned it on its side because it's now starting to look like that profile, right? And what I've done is, again, figured out not the mean, but the mode of the profile, and developed a system that makes it really easy to use market profile to find new balanced areas and also drive that product called the edge that we're getting ready to talk about. And I've turned it into a very simple system. A red line is the unfair high, or the top of that profile. The green line is the unfair low, the bottom of the profile, and that peak of distribution, or the mode of the profile, we're going to look at as a blue line. But we're not going to talk much about the blue line today. We're just going to focus on the balanced area. All right? And if you got any questions, Steve is right there. Now, again, just to define again, high value area, low value area, point of control. This is the meaty part of the bell curve, or where most data points should lie. And that's also considered, in the terminology we're going to use, the fair auction. We're talking about auction market theory. This is what's considered fair, that the stock could actually move around in, or the instrument, the future, whatever, and still be in a so-called balanced state. So we want to find out when stocks are balanced and when stocks are imbalanced. And I wanted to show this IBM chart again. I stripped off the volume off the bottom, and what I did is I put in our volume relative to price profiles. And as you can see, there's some general rules to use these profiles. We're going to talk about that in 2 seconds. But I wanted you to see how they look on the instrument and how you feel probably already how they could keep you on one side of the marketplace or the other. Remember, this concept is all about blocking out one side of the marketplace. You either want to ask yourself, is it okay to be long and not okay to be short, or okay to be short and not okay to be long? That's the holy grail. If you can figure that part out, you have climbed to the top of the mountain in the trading world, trust me. And I want things as black and white as humanly possible when I trade. So here's another picture of the IBM weekly chart. So we looked at a daily, here's the weekly. So here's how the profiles act on a weekly. And this, I actually took these snapshots of these two charts literally minutes before this presentation. So these are very to the hour. All right, so the general rules using these profiles that I've developed are: don't be short when price is trading above the profile. And also, conversely, don't be long when price is trading below the profile. right? Those are just as simple as it gets. There's some innuendos we can get into, and we will, but that's the general rule. We also have some different things that are in. Remember, there's an algorithm outputting these profiles real time, and that algorithm sometimes causes them to be thin, sometimes they're wide, sometimes they're in force a long time, sometimes they're not in force a long time. But the volatility calculating algorithm that we use has different outputs based on different things that are happening in the marketplace. So the narrower the top to bottom, the profiles, the lower the volatility, low volatility. The wider the profiles, the higher the volatility. So it's almost an automatic calculating balanced area where you need to be aware that stocks could gyrate wildly within that balanced area and still literally be in a balanced state. And we're going to make sense of all this in just a little bit. This helps you accurately measure the risk to reward ratios, a cardinal rule before taking any trade. All right. So this is literally, again, just a kind of a transgression into a general rules kind of picture. So the green, no shorts, get long and stay long. Red, no longs, get short and stay short. Is that blue? I think it's purple, I think. That is a non-directional chop, buy lows, short highs. Okay, so as you can see, if you just followed those simple rules that I just talked about on silver, you make money, all right? And it gives you, more importantly, a rules-based environment to use market profile, all right? So again, these are generalities. Now I wanted to show you, just looking at the profiles, we're going to look at Tesla. Again, I took this snapshot literally less than an hour ago. This is a weekly on Tesla, but we can look at a lot of different time frames. So Tesla is not for the faint of heart. I don't have to tell you that. But if you look at these general rules, I didn't put any shorts on the board here. We could have put some short opportunities and gathered more points. But if you just look at Tesla from a weekly standpoint and understand that the inflection points on the outer perimeters, these unfair highs and unfair lows, are incredibly powerful places to pick battles and buy and short stocks, take profits, what have you. So if you'll notice Tesla, I just marked up since, what is this, about less than 2 years. If you just use this simple premise that when profiles are climbing higher, we're buying support and buying breakouts. Let me say that again. It gives you a great opportunity to look at buying support, more importantly, putting stops in, playing defense, and also buying breakouts. You know, I didn't even buy that breakout because that was a continuation there, but I just wanted to point this out. If we picked up some shorts, we'd be over 400 points here in Tesla, and the stock has only climbed about the 140 points from the left edge of this graph. So just using that simple concept on long-term trades, you basically triple the amount of points just in Tesla alone. Here's Tesla's daily profiles. If that weekly gyration is a little bit too much for you, which it's actually too much for me, you get really clear points to know when you're wrong. And remember the profiles. Remember the general rule. Is it okay to be long, not okay to be short, or is it okay to be short and not okay to be long? Think how much money you would have saved yourself dialing into the next time frame to the right and just using this information to pick battles. Remember, when you're trading, the most important thing, period, and I used to run a huge prop group in the Board of Trade, play defense. Learn how to play defense. Figure out how to not lose money. The making money part of it will happen, but that's the first thing we tell people. And if you'll notice, these areas to play defense, to pick battles. So you're picking along here, play defense below. That means stops below, stops below. If you're putting a short on here, stops above, right? So the profiles are a great, great dissertation from just a general trading one-on-one standpoint to guide you through the minefield of trading on a daily basis and be able to play defense and use those risk-reward ratios and put them in your favor. You always want to be kind of, risking 1 to make 3, 4, 5. Here's Apple Weekly, same premise. All right, same general rules on Apple. Think how much money you would have saved yourself trading Apple, and I didn't even do a total here. But if you were long Apple and then Apple had a pretty significant break right in here, How much money did you save yourself just waiting until we started trading above profiles again? 25 points. Okay, wow. Man, I could have gotten out of my longs here, not to mention getting in shorts at around 125 and then picked it back up on sale, possibly down here around 95, 96, 97. And then we've been, again, a buy support situation when profiles start edging higher. Again, buy support. And this was taken a couple of minutes ago, actually. So quite a few points on the board there. And more importantly, I did put one short on the board here. So again, if you've got questions about anything so far, please ask them. Steve is trying to answer all of them. Here's another look. Here's another weekly chart. I'm using some longer term charts today, but I'm going to show you a 60-minute in a second. Here's our Japanese yen. I mean, this is the same premise. Pick the battles, buy the breakouts. The inflection points is where you want to trade, and where to, more importantly, stay out of the longs at that point. And then, again, you know, you've got some great opportunities here. Here's a very short-term trade. This is gold 60-minute. I took it about 60 minutes ago. Again, when gold breaks, it's okay to be short, not okay to be long. A little bit of a long opportunity there, and then, boom, got some breakouts happening here. But those are general rules. They're not the end-all with the profiles. What we're going to talk about now is this, and this is where it gets good. What if we aggregate all the S&P 500 stocks with that profile information into simple descriptors? So what if we take every single S&P 500 stock on a 5-minute time frame and understand where their profiles are lying, and then we aggregate all that data together? And then what if we market capitalization weight this? All right, because I mean, I think Apple's about 4% of the S&Ps now. So if Apple is in its own balanced area, shouldn't we weight Apple's participation in this equation a little bit heavier because its market capitalization weight is relatively high? And some of the stocks that drive the index that don't have a big market cap weight, we just want to, again, pare them down and parse them into a situation to where we can understand them mathematically. And then what if we put this information into an easy to use, easy readable dashboard that tells you exactly what to do? So that's what I've created here that I think is extremely valuable and almost a fifth market internal, almost a fifth market internal outside the tick, trend, advanced decline line, breadth calculations of normally you talk, you know, when somebody goes, oh, the NASDAQ breadth's positive. Okay, wow. You know, 85 stocks are up and 15 are down. But that doesn't really tell me a lot relative to if those 85 stocks that are up are still in their balanced area. Remember, we're trying to use market profile on steroids here to really get some incredibly good market internal insight to try to get an edge. So remember, I just want to hammer this back home, and we're going to go pretty quick here. In a single time frame context, markets are either balanced or they're imbalanced, but never both at the same time. So they're within the constraints of, remember, now we've got the red line and the green line. We're talking about the meaty part of the bell curve, and then when we bust out, right? Those are very important concepts to really understand what type of market phase we're in. So balanced markets are in an expression of time dimension. So this is a time dimension. Imbalanced markets are in an expression of price dimension. All right. Again, I'm just trying to lay the foundation for what you're getting ready to see and why you might accept it as a valid truth. So success in trading is dependent on traders being able to accurately differentiate between these dominant phases of market movement with near certainty. Okay, we're going to go back to that pretty much same picture that we looked at before before we started introducing the market profile concept. This is the edge. You're going to notice a couple of things, and this is a bar chart down below of the S&Ps with those profiles overlaid on top of it. So what we're going to do is we're going to use these two products to basically narrow down and whittle down and filter what are good opportunities to understand when the tide of the marketplace is shifting, and is in fact there an opportunity at all to take advantage. And remember, it's okay to not be in the marketplace every minute. In fact, you know, if you can pare down your participation while you're in the market to very small amounts of times, you are way ahead of the game. All right. Some days it's not even worthwhile in trading. And if you'll notice, a lot of big traders, this is Friday, a lot of big traders actually don't even trade on Friday. A lot of big traders don't trade during lunch hours because a lot of times you'll see stocks just chopping around. But anyway, that's we could have another webinar about that. But what I've got here is I'm showing 3 calculations in the edge. I'm showing the amount of stocks market capitalization weighted that are trading above profiles, the amount of stocks trading within profiles percentage-wise, and the amount of stocks trading below profiles. Now, this calculation is just a net sum of the amount of stocks trading above minus the stocks trading below. So, and these metrics are reflected in these 3 lines. Obviously, that's the blue line, that's the red line, and that's the green line. Okay, this is a volatility meter that we put in. Basically, you remember me telling you earlier that the profiles determine the volatility of the current instrument relative to market profile and what we feel the balanced area actually is right now. So we're giving you the amount of points that the S&P could noisily rattle around and still be in the balanced area. So how do we read this? It's pretty cut and dry from some general rules that we're getting ready to get into some setups. When that green line's above that red line, unless we've got some classical high probability exceptions going on, which we're going to talk about in a second, it's okay to be long, not okay to be short. That's pretty plain. And you've also got the trump card down here on this particular time frame saying we're getting above profiles, we're breadth positive, red line above green line, and we haven't had any reasons to take this trade off. Remember, red line above green line, red line above green line. Uh-oh. A little bit of a shift in the tide of the marketplace, and we're also breaking below profiles. So again, those general simple rules, and this gets a little deeper than this, and we've got a market profile course we're going to get you guys that really brings this together more so if you're a subscriber. That shift happened there, red line above green line, we're headed down, and these are great tools for the, and one, I just want to back up for a second. The biggest comment that we get before I continue of subscribers of this product is it keeps them from doing stupid things. I don't know how other way to say it, but it doesn't allow them to double down on bad situations, and it also allows them to sit on their hands a little more often. It's statistically proven the more often you trade, the higher probability that you have of losing money. I hate to say that if there's any brokers in the audience today, because they obviously make their money off transactions, but it is a patience game. All right, you know, we had a little bit of a cross at the end there, trading above profiles. You'll notice some things on the right over here. We're going to talk about those in a little bit, but that's an extremely important part of the equation also. All right, so this is Steve, and he's in here answering questions live right now. But this was the other day that we had a nice setup, crossover in the morning on the opening, had about a 20-point move down and no reasons to take anything off until we had a new profile automatically appear. It's in the algorithm that this is a piece of the puzzle today that we're going to be offering in the subscription, and also had a little bit of a change in tone in the calculations over here. Okay, so towards the latter part of the day, we kind of got, you know, by the way, trading at lunch, you'll see this blue line kind of take over and be the main mantra and actually have a very high percentage of the stocks trading within this lunchtime area. Remember what I said earlier. Lunchtime might not be the best time in the world to even use this product or trade in general, and that's basically proving that most of the stocks in the S&P 500 are just bouncing around in their balanced area. Now, if you want to be like a market maker and, you know, offer bids and put out offers and bids, that's totally up to you, and there's a lot of people who make a lot of money doing that, but we're not here to talk about that today. And towards the end of the day, we had a nice little move. Lunchtime was over. breath got really going pretty hard. And we've got really good tutorials on the classic setups for you. But another 15 points in the afternoon, and we actually use this information too. All right, so now we're going to talk about 5 simple trade setups using the edge. I just talked about some generalities right then, and I wanted to show you a couple of mechanics just to be aware of. But the first trade setup is when we have a clear understanding of which way the true tide of the marketplace lies. Remember, stocks being balanced or imbalanced and who's kind of winning the war. Then we can efficiently block out one side of the marketplace only, and only take longs or only take shorts. So in effect, we're making the statement that it's either okay to be long and not okay to be short, or okay to be short and not okay to be long. And that's personally the way I have to have it. And you know, we ran an entire proprietary trading operation just based on those simple concepts, and it keeps it simple, it keeps it black and white. And to be honest with you, if you fight it, you might not feel like that's the smartest thing to do in the world. So again, here's that chart we looked at before. Shift in a tide. I blocked out the blue ground here. There's a little thing you can block out the blue line. I just wanted to show again, we get above profiles, market breadth turns positive. We start trading market breadth negative. I'm saying market breadth being that the red line's above the green line. We also start breaking down below profiles, right? It can be pretty much that simple. So that's the first main setup. Setup number 2, and there's more than this in the tutorials. When a crossover happens above the blue line, the amount of stocks trading within profiles, remember the blue line is the stocks that are in their own balanced areas. And remember the red line and the blue line and the green line, and those metrics are aggregate calculations of all the S&P 500 stocks with market capitalization weighted features in it. It's coming from our servers, and we're doing the calculations, and it updates at least once every 5 seconds, and we're bringing it down to 3 seconds now. This particular setup happens rather infrequent. When it happens, we're in a very indecisive state. The market is trying to resolve itself one way or the other. So think about it this way, and market momentum after this cross can be rapid. Think about it. If the balanced area is kind of in the weeds down here, and the blue line is not really prevalent or trading above it, when you've got something like this, what have you got basically? You've got a tug of war between market and participants, and all those internals at some point, remember, especially on the opening, and this was on the opening, what is it? Who's usually controlling the opening? The market makers are usually controlling the opening, and market makers this day and time could be 80% machines or even more. What is their main goal as a market maker? Remember, they're putting out bids and offers. Their main goal is to get filled. They don't care which way the market goes. And personally, I don't either. But I'd like to know who wins that war, and then what's the carnage afterwards, because somebody's got to cover. Right? So as you see these crosses above the blue line, a lot of times that will predicate a move that's relatively significant. In this case, it was really significant. But if you get these crosses above the middle ground, these are tug of wars where somebody will win and then the other side has to cover. And a lot of times you'll get a big slope in the graph happening one way or the other. Setup number 3, this is my favorite of all. This, if you did nothing other, and the alert system that we're going to put in the subscription package will let you know when these are happening, because if you did nothing other than this one setup right here, you would be way ahead of the game, because this is a very high probability setup I'm getting ready to show you. This is when markets get overextended. Market imbalance extremes above the 66% line, which cross back down below the 66% line, can alert the trader to look for other confirmations that trend exhaustion could be happening and a contra-trend position could be taken. So what does this all mean? So within the edge, we've got a 66% line up there. And I could go into why that particular level is so important. But if you could just accept it right now, then we could save a little time. And I might talk about it in some of the tutorials that we've got available for you if you subscribe. But for right now, if we cross, what that setup says is if we cross above the 66% line and get back down below, kind of like an RSI crossing over, stochastic, what have you, but this is based around market profile, and we start seeing some people at the same time reach for some shorts. You can't really see this in this particular chart that well, but that is an indication that you've got people reaching for the other side of the fence in a pretty big way, and you got really overextended here. And the other cool thing is, in this case, we actually started breaking below profiles again. All right, so we got a confirmation that we really could step on the gas pedal here. But then we kind of get into lunch. You see the blue ground taking over, kind of start mashing around. But that's the extension move that you're looking for in this type of setup. We call them extreme reversals. And there's another picture right here. I didn't put the chart up on this to the side, but if you'll notice, when that happens, you'll generally get some kind of, especially if you can get the people start reaching for the other side at the same time, you'll get some changes in the tide of the marketplace for sure, but you also will get changes in the price action. And again, there's that middle ground kind of taking over, kind of avoid the chop. And then we had a pretty decent little situation towards the end of the day there where we, again, so I can't draw. I've never said I could, so sorry about that. You also have, we're going to talk about this over here next. Actually, after we talk about divergences, if you trade long enough and you listen to some folks, a lot of them will talk about divergences. That holds true also using the edge. Divergences in price action relative to peaks and extremes will alert the trader to trend exhaustions and possible targets being met for the short term. If this happens where major inflection points lie, then a possible reversal is in place. All right, so what you'll notice here is we had an extreme. That's great. That was about right there. Now, nothing is ever guaranteed. I want to say that again. Nothing's 100% guaranteed. So we always want to have stops in no matter what we're doing. So when we had that extreme trade, we had another little dipsy-do down there, like another point. But guess what? We didn't have a higher high in the amount of stocks that were trading below profiles, but look at what we had. We had lower low in price action. So when I see that, I'm like, okay, something's happening here. Maybe I can take advantage of it. We started having people reach for longs. Slopes started happening there. And then we had a little bit of a pop, and we at least got into the balanced area. So these divergences are also something that you can look for, and we're going to alert you to them. Setup number 5 is, now this goes back to some of those first charts we looked at, and we call this our landscape view of the edge. And what we've done, simply put, is we've taken the S&P 500 futures levels, which trade 24 hours a day pretty much. We put our weekly profile, and that is a great circle. Our weekly profile, unfair high, unfair low. Our daily profile, you'll see the monikers down below of the time frames. Daily profile, 240 and 60. The reason we put these in here is because I personally feel that those particular time frames are extremely important to be aware of at bare minimum. So what we're going to do, I want to focus now on this little area right here. And I wish I could pull up my chart here, but I don't know if I'll mess up my presentation with it live. I forgot to put the S&P chart right after this slide. But these two numbers here, this is 2400, this is 2403.5, this is 2406. The reason I'm circling that is because when you have a confluence of long-term major inflection points happening, that can be either long-term support or long-term resistance. And what the edge, no matter what the edge is doing, you want to lick your lips if you can approach that area. Price starts approaching those types of areas. And what this is up here, this is the level of the market. The reason we have this level of the market displayed, it's a real-time price display that tells you where the market is. And people look at this and go, what the heck? All right, it's not a bar chart. It's exactly what the price is doing across all those 4 time frames. So that moves around. And I tell people a lot, I said, sometimes when I look at charts, even when I'm looking at my own information with the profiles, and I think I've got those rules hard-coded in my head finally, if I look at a chart, sometimes I see things that aren't there. I'll see, okay, head and shoulders, this and that, you know, and I artistically read it wrong. And I say artistically because that is, to some degree, a subjective viewpoint. So what I do a lot of times is I kind of don't even look at the bar chart. I just look at what's the edge doing, what's the level of the market, and how can I play defense? And where are we kind of developing a hole in the marketplace that I can step on the gas pedal as long as the edge is telling me it's okay to do so. So a lot of folks will take a look at actually not using their bar charts and just basically using this product relative to an execution system. I'm not saying do that one way or the other, but it kind of sometimes takes out the you know, some folks' artistic great abilities like I have. I'm being sarcastic. All right, so those major inflection points that we just looked at, I just want to point these out. Those were the weekly profiles, the daily profiles, the 240 profiles, and the 60-minute profiles. All right. So, and we're going to get into some Q&A in just in a second, but who is the edge good for? Any trader, beginner, intermediate, or expert. Any trader wants to have a powerfully accurate tool to time their trades. Remember, this is a tide of the marketplace shift type tool. And again, you're not going to want to sit on the edge of your seat and trade every single crossover. We're going to want to look for those high probability setups, and we talk about those in the tutorials. You're also going to want to look at those profiles along the way, which are part of this package. A trader who wants to stop guessing for trades and go with the one market timing tool that literally defines the rest, and anyone who wants to master good risk management in all trades at any time frame. So what that last one really encapsulates is, I think, a validation from a lot of feedback that we get, which is it keeps me from doing stupid things anymore. Like, you know, so if that breadth is positive and you've got some other indications going on with the profiles in general on your chart, it's okay to be long and not okay to be short. It's that simple. And if you're going against that, then you're just really wanting to subject yourself to pain, and that's a whole nother webinar. But so just to recap, provides profit-rich opportunities, trade entries where shifting control is happening, alerts you when the opportunities are happening, and confronts, this is the big one, the biggest challenges that almost every retail trader makes when trying to trade S&Ps or any high beta stock like Apple, Microsoft, and some other ones. Knowing how to limit losses and being ready when the tide of the market shifts. Okay, that's the big one. So what we're offering today in the subscription is the Edge, a standalone indicator platform, no data required, simple installation. We provide the data. These are real-time price derivatives. You don't need to get any exchange agreement signed, anything like that. This is giving you everything you need, and you can't find a price in here of what's going on. We're not disseminating price. We're disseminating price derivatives and what our version of market profile is and how to gain an edge using those tools. And I don't know if you read my bio there, but I speak in front of huge crowds for Bloomberg across the globe. The last one I spoke at was in Seoul, Korea. You know, these institutional guys that I speak to, and that Bloomberg terminal is not cheap, so most of the guys that I talk to in these conferences, they usually already have a trading plan. So, you know, a lot of them are money raisers. They're not traders. So when I'm on the terminal, and I've got a lot of technical indicators on the Bloomberg terminal, a lot of those guys who trade fundamentals want to find some technical confirmations on top of their normal trading plan. So if you have a trading plan, and the reason I'm bringing it up right now is we're also going to give you this profile indicator that's on the Bloomberg terminal that on any given day, over 3,000 Bloomberg subscribers log in and use this particular one indicator out of about 300,000. So we have about a 1% penetration rate in the institutional world using this one indicator. All right, we're throwing this in with the subscription to the Edge. So to leave you, we've talked about this profile indicator. It also, we've got it on about 8 or 9 different platforms, but if your platform is not supported that we've integrated into, you can always use the free version of NT7 initially, and we'll take, while you're using that, we want to know different platforms that are out there that you guys might need this profile indicator on. But remember, the edge completely standalone. The profile indicator, you're going to need a charting package. Now, we got a little delayed with this, but I think we're going to have it out Monday, Tuesday. I'm pretty sure we are. We've got two apps, but one of them, I wanted to develop another one that just gives a long bias, short bias, and neutral bias app, and it will send it out to you. It'll pop up on your phone. It's got push notifications, everything. I put launch September 18th here. It may be the 19th, it may be the 20th, but you know, I personally have had an experience of, you know, really not wanting to sit in front of the terminal on a day-to-day basis to wait for a signal that might happen once or twice a day. So I had that happen about 3 months ago, and I went to the grocery store, and lo and behold, I come back, and the coolest setup in the world had happened, and I was like, thanks. So I thought it would be cool to be able to give people, so they wouldn't have to just sit here. We'll send you a signal when there's something to look at, and what side of the, again, we're going to be blocking out one side of the marketplace for you. So I thought this would not only be almost a social justice to people trying to use this, but also almost it's a standalone product in itself, and it's based around all the theory that we've talked about today with market profile and the limited amount of time that we've had. We're also going to throw in some live market sessions. We don't want to just give you something and say, hey, c'est la vie, just thanks, take it easy. We want you to continue to have, you know, some touch and feel with us. I mean, not only are we going to, you know, if you're a subscriber, throw you a free market profile course, the Signal app I just talked about, the profile indicator, the Edge product. We want to continue to do these, and we'll just continue to do these group sessions during live market hours. So before we get into QA, I'm just going to leave this up here. So this is egregiously cheap relative to what I normally sell it to institutions and other folks. It's $997 off today, so it's $497 a quarter to get all this, and this is a really good deal, folks, relative to what we normally put this out at. So you're going to get the Edge and the profile indicator. You're also going to get the Signal app that I don't even have on here. I don't know why I didn't do that. You're also going to get the training sessions. So you're going to get all that, and well, so that's 4 things put together for $497 a quarter, and this deal expires 12 p.m. on Sunday, Eastern time, and then we're going to go back to normal pricing. So that's pretty much it. And what I'm going to do now is I'm going to look at some questions myself. Steve's been answering them along the way. And now I want anybody that, and again, that's where you get it down below. And I never claimed to be able to draw a straight line. That's unbelievable. That's where you kind of get involved with this, and I really hope you guys can take a hard look at this. Like I said in that story, getting involved with market profile changed my life, and it's allowed me to really progress in trading. And a lot of people don't use this, and they should, because they've heard stories, oh, it's difficult to use, it's subjective. This is a very rules-based environment. Okay, Tony, I would like to, so we're going to go into some questions, and I'd like to see your YouTube videos in the TAS and live markets. We'll try to, yep, Steve's answering them. It's my sentiments exactly. Mainly futures, yep, we focus on futures as well as stocks. What is broadcasting the app? Okay, Kenny, that's a great question. I've actually got 2 apps. One of them, you know, we have entry stop target, keeps track of everything, all that, but we've hooked that up to some of our automated systems. So what we do in this broadcast app, which I thought would be very simply appropriate, was just telling you when there's an opportunity, a long opportunity, a short opportunity, or a neutral opportunity. And for instance, if there's a long opportunity and then, you know, okay, the trade's over, it's going to go neutral. So that's basically what that is. Yes, we're going to send out a recording for sure. Please show how you would use this trade in Apple today. I'm not quite following how this works, Mary. We might have time for that, Mary. Let's try to get through a couple other ones. I tell you what I'll do. I'd love to show it, some charts on Apple. That Apple was a weekly chart that I showed, and I think I might have showed a daily, so I know that doesn't give you, excuse me, a lot of great information on how to intraday trade Apple, what I showed, but we'll try. How does one learn all this? Les Haugen. Okay. Well, we've got a course that we're including with this on market profile and some of the basic logic behind it. Because again, trying to do this in 45 minutes is really doing market profile a disservice, I guess, less. So we feel like we've got a really good handle on this and a good way to kind of hold your hand through some of it. So that's market profile. I mean, I'm not going to lie to you. There's some stuff on the internet about market profile, but our automated algorithm derivative of market profile is extremely unique, and it basically takes out a lot of you're going to be sitting there for weeks trying to figure out how to artistically read and subjectively deduce market profile charts, and that's not what I wanted to do. And I spent 2 years with Pete up there in the Board of Trade trying to get away from that. One of Pete's favorite sayings to me, as I was in the subjective world and scratching my head, I said, Pete, what do you do here? And I don't know if you remember the Indian in the Outlaw Josie Wales, he had a phrase in there. He said, "That's an endeavor to persevere," and that was, I don't know if Pete knowingly knew that phrase from that movie, but that used to drive me nuts. So that's why this goes into a very rules-based environment with the derivative of market profile that I developed, that you don't have to go through that stuff. Is this system akin to 80x DMI? Not at all. Can you show me E-mini S&P chart now? Let me see if I can do that, Tom. Let me just get through a couple more questions here. Since it works on high beta stocks, does it work on low beta also? Yes. Okay, what I was referring to there, Banu, was the edge is going to give you the tide of the marketplace changes, and you're not always going to want to be in the market. I mean, every time the red line's above the green line or vice versa, sometimes you just need to sit tight because you want the probabilities to be there in certain setups. So the reason I said that would help with high beta stocks, because remember, high beta stocks trade with the market. So if you know which way the market's going, therefore, a lot of times those high beta stocks are going that way. And if there's anomalies with those high beta stocks, like, okay, the edge is positive, it's a great setup, and Microsoft can't get out of its own way. All right, so you might not want to trade Microsoft, that high beta stock, from the long side. You might want to wait till the edge goes negative, and then you got kind of super probabilities shorting Microsoft, if that makes sense. But on the low beta stocks, the profiles I pulled up, I mean, I don't know if Tesla is a high beta stock or not. I haven't looked at the beta calculation lately, but that is it will take your breath away trading that stock sometimes. But if that's a low beta stock, if you saw how those profiles worked on that if that's a low beta stock, you saw how those profiles worked on that stock. And in fact, this literally was taken, I don't know if I can get back to that slide. Let me see if I can do that in a little bit. But the profiles work incredibly well on individual instruments, using the edge to gain a market advantage trading low beta stocks. That probably doesn't go together. Do you have a coaching call? Okay, yeah. Looks pretty powerful, but I get the feeling of so much data, but tough to extract information. Dumb. All right, well, we've tried to make it as simple as possible. And again, if anything's worth its weight in value, it might take a little bit for the clouds to part, if you know what I mean, Dom. So that course, I think, brings a lot of things together, but also, and that just strictly talks about market profile and our derivative, but also the edge tutorials are gonna, you watch those things over and over again. I mean, not till you're brainwashed, but just to kind of, okay, yeah, I get it, I understand what's happening here. And the best thing to do always when you're learning a new system or even trying something new is don't put real money on it. Don't go in there with both guns blazing, because there's always some kind of tuition you want to avoid. That's the first thing I told the prop traders in Chicago. We had 50 guys trading futures, a lot of them the DAX. I mean, it was like breathless situations that, you have to kind of like understand, I need to trade as small as humanly possible, pay as little tuition fees as possible while I'm in the learning process, or just trade a demo account until you feel like, hey, wow, this is pretty cool, and I have a step-by-step process that I think we lay out pretty well for you to move forward ringing the register. The renewal is the same price, Munyana, $4.97. You're locked in, and that's, again, TradeThirsty didn't get me inebriated to give that away. I thought that was the greatest deal that we could offer. It's outside of our normal pricing by a long shot. But we want people to stay on board, and we want you to use this, and we want you to make money. Rich Raymond, didn't miss that. Yeah, he answered that. Sorry about that, Rich. It's like what was the guy in Anchorman? He read anything on the prompter. That's kind of what I'm doing, Rich. I apologize. TradeView. I don't know about that. Maybe we could. We'll take a note of that. I'm not sure, but you could use Ninja in the meantime. Are you using this for day trading? So yeah, Steve answered that. That's great. TradingView. Okay. Can you show a 1 minute chart on the S&P illustration? Yep. We'll get to that. Let's see. What is the connection between this system and your seasonality? I don't think we do any seasonality presentations to my knowledge, unless somebody in my company is rogue and putting out reports I'm not aware of. Albert. That's a good question, though. I'll have to look into that. I'm pretty sure we're not doing seasonalities. Let's see. What is the best combination of indicators for long term? That course, I think, pretty much explicitly states it. Like to see demo on that, please. Okay. Does it work on TOS? Not this minute, but we're working on it. And if you get on board with this price, I guarantee we will have it done. Ninja might suffice in the meantime. After talking to the video, Dom, yeah, I mean we've got a help desk. We dive into things from an owner standpoint. After taking the video course, we have an email access for you questions. You've always got access to us. Yeah, we're not, we want people to stay on board for a long time. These are not sell it and forget it situations. I don't know how many of those out there you're used to, but we have a cult almost, and I'm in that cult too, that really relies on this information. Charles, I think when you watch the tutorials, that question, does it give any probability on time that a movement may take? Well, that's a function of the profiles in conjunction with the edge, Charles. And a lot of times, for longer term, well, the edge is only an intraday tool. I use the profiles. That's a great question, Charles, now that I think about it. I use the profiles exclusively in my trading. There's a couple other indicators that we have. There's quite a few on Bloomberg that I use, but the profiles are like 85% of my decision-making process. And I use a multi-time frame approach, Charles. I look at, okay, what's the long-term MO relative to profiles? Then I start moving to the right to shorter-term time frames. And the beauty of it is as long as I understand what the main MO is relative to the profiles, then I'll let the time frame to the right regulate that trade one way or the other. Provide me some type of regulation of the trend or stops, targets, what have you. Training's ongoing. That's pretty much, as we're not here to ream you out on training. We want you to get the product and make money. Later today, let's see. Steve's answering quite a few of these questions. I don't know if you can see them all. How many computer licenses do I have? We kind of take that on a case-by-case basis. I think the logins are unique. So, and we've got a little bit more advanced, I think, than most companies. We've got a launch pad that recognizes your user and password wherever you're at. So I think, Tom, that kind of takes care of that. You could pretty much have it on a zillion machines. How much emphasis should I give on fundamentals of stock before buying through technicals are only for entries and exits? That's, Amit, that's kind of a, I have to sit back and ponder that for a second. I'm a huge fan of just looking at technicals, but also being aware of fundamental events. Every time I've tried to trade on fundamentals, I've lost money, and I'm just telling you my personal experience. We do have funds we consult for, though, that are some of the best fundamental analysis I've ever seen, and they're always right in the long term. And we did a study with one of them. We said, look, okay, give me all your picks. You got $350 million in the fund. They're the worst at entries in the history of funds. They'll buy a stock after it's up 5 big days in a row, instead of trying to figure out where to buy it on a breakout or pullbacks or whatever. Terrible entries, incredibly bad. So what we did is we did a study with them, overlaying our profiles on that fund's, like where they wanted to enter based on fundamentals and where the technicals told them, and we would have saved them like $22 million that 1 year alone. So I think my opinion of that, this is getting away from, I guess, our presentation today, but everything's baked in the price and the volume, and that's what this information that we're showing you today really encapsulates. Volume relative to price. Those fundamental events, whatever they've done and whatever they've blabbed out on some social media tube, guess what? At the end of the day, today, those prices are where they are because that's where the buyers and the sellers decided it should be. It's not where it's supposed to be later. I mean, I don't know how to say that any better. Steve's answering some profile questions there. Can you name these good fundamental funds? Are you being sarcastic? Because they were pretty good, but entries and exits were awful. This was this study was done back in, I want to say 2010, 2011. Can I try 1 quarter? Yes. But highly debt company do you trade on? But highly debt company do you trade on them? Are you talking about convertible bonds and debt securities and treasuries, or I don't understand that question, Amit. Okay. No, I'm serious. Okay. I think this particular fund was called Pinnacle, if I remember correctly, and it was out of Great Neck, New York. But I might need to look up if there's some other acronyms associated with that name. Okay. Let me try something here. How you guys doing? Still, let me see if I can show something here. Somebody asked me about the S&Ps. Now, this is a weekly of the continuous S&Ps, and we use the continuous. I normally don't veer away from the slides too much, but this is why the profiles are so powerful. This is a weekly continuous. We want to use continuous because when we analyze, and these are the same levels in the edge, and they're also, this profile is also something you're going to get on the charts. You can see that these inflection points are powerful areas to pick battles, and when we get a breakout, you know it's okay to be long, not okay to be short, and that long-term support area now is 24.79. I think somebody asked about short-term. These are our 5-minute profiles on the S&Ps, how they look, real time. I think this is delayed 15 minutes here. But again, you know, the edge is hopefully going to give you some extra confirmation and kind of put the decision-making process on steroids. And again, here's the 240s. So as you can see, the reason I have these particular time frames in the edge baked in is because I think you need to be aware of these. As you can see that. And these profiles will stay in force as long as they need to. And they will develop new ones when they need to. Okay? All right, Jeanette's going to kill me. Yeah, listen, Jeff, Jeff's comment was great info, looks great product. Thanks, Jeff. You know, we're not painting these things on there. They're known way ahead of time. You know, so when a new profile, for instance, outputs, you know, just like I showed you on some of those charts, you know that if we're in a trend and we're getting ready to have a new profile here, that's what that yellow bar means, right? It might be time to take some off the table if you're long and wait, because a lot of times these profiles are fully explored, right? What does that mean? That means that the balanced area that we defined early in this presentation a lot of times is completely experienced. So if you've got a new profile that's appeared and you've been in a run up and you've got a new profile that's sitting there just automatically algorithmically outputted, why in the world, odds-wise, would you want to suffer through the pullback to the other side of the profile? Do you know what I mean? I forgot who I was talking to. I'm talking to myself. Show you how we would trade at Apple today using your product. Okay, let's do it. Got no problems. All right, here's a 5-minute chart of Apple and using the profiles. And as they say in North Carolina, voila. I'm from North Carolina, so I can say stuff like that. And again, what was this, the opening today? This is today, right? Yeah, okay, so this is a 5-minute bar chart, and these are the profiles. So again, okay to be long, not okay to be short. New profile. We didn't even get the pullback here on the 5-minute. Then we get the breakout again. But I personally, whoever asked that question, was it Mary? I personally don't trade. I like to look at the bigger kind of picture stuff, especially on the apples. Here's the 240s. You know, that's kind of a target situation for me. I like to look at these two. You know, here's, I think this is way pre-market or something over here. But so if you're using the edge with the Apple 5-minute chart, and I'm going to pull up the edge here. This is today. As you can see, I'm going to focus in on this, and I'm going to just kind of like focus in on this, right? This is the S&Ps, and this is what the S&Ps are doing. So as we were breath positive here from the morning, stay breath positive, Apple. Okay, and I talked about high beta stocks relative to changes in the tide of the marketplace. As you can see, this is a price chart down below. Positive, positive, positive. We're kind of hanging in there. We go negative. It's not the best time in the world to trade. The blue line, remember, above this is saying it's lunchtime, and we got to watch out. But if you use this in conjunction with Apple, I forgot who asked that question, Mary. You know, you've got some pretty big odds in your favor to try to put the pieces of the puzzle together, and more importantly, excuse me, when to just stay patient. I mean, you don't have to be in the market all the time. That's the hardest thing to do is sit in front of this machine. I know it. Trust me. Trust me, I know it. And do nothing. You know, I mean, it's a patience game and waiting for. You know, I have a graduate degree in mathematics, but the main thing that I use from those days is probabilities. You know, this is the way all algorithms work. If you guys have been studying strategies and doing your own backtesting work and things like that, you know exactly what I'm talking about. So what we're doing is trying to put probabilities in our favor. And if the odds aren't there, you got to pass. So that's what this is hopefully doing for you. We've got the price here, John. What is the screen John is showing? Is it? Oh yeah, I was showing e-signal there because that's one of my favorite platforms, by the way. I've used it. It's not, you know, it's pretty. That's why I like it. Yeah, okay, Manu, that long-term investor, this is what I want you to think about. This is a great question. Makes it harder for a long-term investor to get in and get out of market too often. Right. Now, what might be appropriate, and we've got a scanner that we built, you know, this is a whole nother webinar we're going to do on this, but those long-term profiles are going to let you look at those, because I'm assuming as a long-term investor, you're okay with kind of gyrations in the marketplace. Those long-term weekly profiles are incredible. I showed them on Apple, and what I want to do, I want to go back to that. Now that we're kind of at this state, I want to show you something. And operate my screen very well. I want to go back, because I think the clouds might have parted a little bit. I want to go back to this. Here's Apple, and this is a weekly chart, and most intraday traders would never suffer through 30 points down in Apple. Trust me, I couldn't do it myself. So if you're a long-term investor, you might as well have this technical indicator to be able to regulate the stocks that you're in and try to know when it's okay to be long and not okay to be short, or okay to be short right there and not okay to be long, and when and where to pick your battles. When is it time to sit on the sidelines and go to cash, Banu? One of the things I think this thing's going to do for you on that level is paint a really, really cool picture without having to think too much, while having market profile on your side. Well, guys, we've gone over about 1 hour and 15 minutes here. I'm going to really thank you for staying as long as you did. And I want to also thank you for looking at the information we gave today. It changed my life. When I was in Chicago, I was not a great trader at one point. And again, this was the only thing that I could rely on. And I put it, I think, into a very easy compartment. These indicators, that alert system, the edge, the tutorials, and the training sessions we're going to do, that's a great deal. And I want you guys to take advantage of it. So thank you very much. eSignal, somebody's asking about eSignal. You have to talk to eSignal about that. So guys, hope to be in contact with you soon. I hope you're on board, and we look forward to working with you. Thanks very much.